Warning. Are stocks going to continue to crash to the upside? Or, put another way, are the bears trapped one more time? Because short sellers are in danger of extinction after crushing stock market gains. What this means is that the bulls have faced major tests, and this week's no different. We're going to face our final boss, or Jerome Powell, on Wednesday when the FOMC meets. Before that, though, we have an Nvidia split on Monday, along with the AI event from Apple, which is widely going to be watched. But just before we jump into that, what I would like to do is to play a short clip here from Tom Lee to set the stage. Let's tune in.
Good to see you, Scott.
That was the news of the day this morning. We're buyers of stocks on Friday, but even stronger if the jobs report is soft. The implication being you're buying no matter what. So it wasn't soft. It was hotter than expected. But nonetheless, why did you come into today thinking you were buying stocks regardless?
Well, there's a couple reasons, Scott. The first is that I think markets are much more focused on inflation reports and CPIs next week and the June FOMC meeting on Wednesday. And
all right. That's the first clip. Now let's play the second one here.
That, thinking that June is going to be the point of the year in which we start to get this money off the sidelines and into the market, and how Goldman Sachs framed it the other day, talking about a, quote, wall of money coming in, but not really until July, that you could have some selling between now and then, but that the beginning of the third quarter and thus the second half of the year is the area to really plan for a wall of money coming into this market and then pushing stocks that next leg higher.
Scott, that dynamic is certainly at play for a couple of reasons. One, April was a down month, and I think a lot of institutional investors actually sat out May thinking April was the start of a bigger correction, so June is when money starts coming back in. But I think more importantly, since the end of 2022, I think a lot of institutions and a lot of high net worth individuals sort of sat out this market saying, hey, I'm happy earning 5%. By the middle of this year, if the S&P is up 15%, on top of missing 30% last year, I think a lot of folks are going to say, listen, I can't just sit on cash and earn 5% anymore when I'm missing out potentially on a 25% year for the S&P.
All right, so that's pretty much the clip. And what I hear him talking about is something called FOMO. So let's pick the story up and let's continue here. All right, so thank you, Tom Lee, our resident bull. What he's really talking about is whether we can get continued momentum into the month of June, which we know we can. And it really comes down to whether or not we're repeating 1995 on the left versus the 2020s on the right here. We've talked about this pattern quite frequently, but where I want to focus is here on number 4, where once we break out, we go dramatically higher. We go higher by 220% after we make it to a new blue sky territory, which we've just started. So what Tom is talking about is a decrease in inflation. Look here, CPI on a month over month is going to go down to 0.1. So is PPI. Is that what the market's looking for the next leg higher? Well, like Tom also said, there's a lot of money sitting on the sidelines. That wall of money currently sitting at $6 trillion. So what's Jerome Powell going to say on Wednesday? Because this data is going to be sandwiched in between before Jerome Powell talks and just after Jerome Powell talks. This is going to be very, very interesting at a time when the market was in fear a month ago, and now we're solidly here in neutral. But please also know there are some bearish catalysts. Traders got stunned last week from elections in Mexico and in India. And as of right now, Scholz's Social Democrats suffer historic rout in German EU vote. So stay tuned, because I've summarized all of these notes for you along with our key notes and all the market moving key things we're looking for this week. But the first thing I want to do is go back here to our story and pick it up, because, man, we talked about this level at 534, which we closed over by 1 cent. So let's pick the story up this week. Let's go. Thank you, Jerome. All right, so we've got inflation coming out on Monday. That'll be the most important event, in my opinion. Then Jerome, then PPI on Friday, along with a 10-year auction and a 30-year auction. Man, it's a jam-packed data week. So what's going to happen with Nvidia on Monday? If this is truly going to be a wall of money, we should see strong action from Nvidia, but more importantly, a stronger reaction from Apple. Why? Apple's still really important, and they appear like they are late to the party. We'll come back to these rate cuts from Jerome a little bit later, but as of right now, 55% chance in September and a 90% chance going into December. So what's Jerome going to do? Because the rest of the world is a whole bunch lower than we are right now. The US is the outlier, and they are high. Apple needs to make the iPhone cool again. Tomorrow is its chance. And that's exactly what we're going to talk about today. I'm going to ask you for one favor before we go further. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. So Apple's been late to the party, but we're going to hear about everything they plan to do with an AI focus or Apple Intelligence. And this is important because they're supposed to be announcing a really big partnership with Sam Altman, who's been bending the world to his will ever since before OpenAI. So is Apple going to be locking themselves into a guy who might not really be the winner and he was trying to really take advantage? Hey, we're going to find out. On the flip side, short sellers are in danger of extinction. They're facing threats from all sides. Whoa. And this is important because big tech profit growth is expected to slow. So what do we need? Well, we need the rest of the S&P 500 to step up soon, right? We need to see broader participation. And that is exactly what I'm talking about here. So I mentioned that we're in annual and monthly green lights for the S&P, which really means we have US exceptionalism, but we need to see some broadening out. And we'll look at three charts specifically a little bit later in the show. All right. Discretionary is traditionally a huge driver of S&P 500 earnings and typically picks up the slack. Well, we better see that happen soon because I'm talking about energy, materials, consumer discretionary, industrials, and financials. I think all those cyclical sectors are going to do better in the second half of this year. That pretty much means widening out. B of A, clients pulled almost $2.2 billion from tech during the week ending May 31st, the second most in the bank's data going back to 2008. Where are they putting their money? There's inflows into consumer discretionaries, which are up 1.9 on the year. So here are the top consumer discretionary stocks: Amazon, Tesla, Home Depot, McDonald's, Bookings, Lowe's, Starbucks, Chipotle. Man, some of these stocks have had a rough go. Nike, Starbucks, McDonald's, Tesla, to name a few. So these names have to pick up momentum. And we do have a really big event from Tesla coming out in August after we get through all this. The robotaxi, what's that going to do? Well, we better see this money come off the sidelines. Otherwise, we're not sure we're going to get the rally continuing here. What's also really notable is that Bitcoin is seeing really big inflows, longest streak of daily inflows. Whoa. So what's this doing? It's reigniting everything in crypto, right? We're talking about IPOs or initial coin offerings. Whoa. And the S&P already does really well during this period. We know we're up 5% in the month. And we've talked about this before, but I do want to revisit it because continued strength usually gets you what? More strength, right? Higher highs and higher lows means momentum. We've talked about this before, but we're going to go back here to May 4th, even earlier. It's a Goldilocks report that will please the Fed and the markets. That seems like it's a really important factor right now. Yes. And we talked about Newton's first law, where objects in motion tend to stay in motion until we get an equal and offsetting opposite force. Well, right now, all we're doing is going up, 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 up. So what does that mean? We're probably going to keep going up more. And as of right now, we got another revision on the GDP, which is now sitting at 3.1. So if this number holds, it appears like the market is going to continue to go higher. Why? Stagflation concerns are likely going to go away and the momentum's going to pick up. All right. We've talked about this before too. So if you don't own stocks or you're shorting, you're probably really regretting number two. Please make sure you're mindful of that. And Jerome Powell might be laughing. Why? Well, I just showed you, right? This GDP number is rock solid and the inflation rate's coming down, like Tom Lee said. So Jerome Powell might be the best banker in the world. Why? Whether they cut now in September or December, man, I don't really care. I'd rather they delay it a little bit longer. Why? We'll talk about that in a second. But in the 1995 soft landing, the Fed cut, then held for 3 meetings. Whoop. Let's cut in September and then let's pause. Why? Because I want it to be 1995, baby. Whoop. As we look here to the chart, what it shows us is that most people focus on the part where the majority of the declines in the bear market happen after the Fed pivot. Yes, 36, 48, 27, 51, 58, and 35% declines. But what they don't talk about is that these are times when the Fed pivoted because they had to. Right now, the Fed is pivoting because they're able to. So if it's really 1995, man, there could be tremendous gains from here. Look how big the market went up. It was a boom, right? Boom towns, baby. So that's what it really comes down to, whether or not we're really going into 1995 and we see Apple really continue the party here. That's right, Jerome. We'll see what you have to say about us next week. And as Warren Buffett has said, the stock market is a device for transferring money from the impatient to the patient. So have a little bit of patience. Don't bet against America, and maybe stick to what's working, because Tom Lee is saying that Nvidia is a generational story for now, which means a big cycle. All right, so if now we continue the story and just look at these key events here, then we'll go look at a couple of quick charts. So as of right now, we've gotten through a lot of things so far, as I mentioned, with the bull tests. Now we've got the Nvidia split, WWDC, a 10-year auction, CPI, the Fed decides, we got Powell, we got PPI, and we got a 10-year note auction this week. Please remember, we also have other stuff coming out, but more importantly, let's look at these notes at the top here. Green means pedal to the metal. We're on the highway. We got a green light. We're in cruise control, which means we have U.S. exceptionalism with the S&P, the NASDAQ, the dollar, and the 10-year note all going higher. Here's what I want to see to continue the rally, though, as we just reviewed. I want to see it broadening out, specifically on RSP, XLF, IWM, and CAF. Let's look at those charts right now. So here we're looking at a monthly chart. And we do note that the S&P is now currently in a blue sky territory over all previous resistance. What is that? It's bullish. What about the NASDAQ, though? Well, here we go. U.S. exceptionalism. We note that the NASDAQ is also above the previous candle high in blue sky territory, which means a record weekly close. If now we go over here to the dollar, here's where, again, the U.S. exceptionalism is really important. Why? Well, because the dollar's going up. It's going up on the weekly chart. It's going up on the monthly chart. And this would normally cause a lot of pressure on stocks. But remember, the U.S. is not hiking rates. So as other countries start to decline, like Europe and also in Canada, the dollar continues to get stronger. U.S. exceptionalism. If you look at the U.S. 10-year note as well, similar story here. This is the one that I said was very scary not that long ago, because going back here to our key pivot, we're actually bouncing off of that in a double uptrend, which means that it appears like yields are going to continue to go higher. But at least for now, it's not breaking the system. All right, let's look at those last two charts now. RSP and XLF. Why? Well, because I'm still not sure whether this is a double top or if we're actually going to break out and go higher. Why? Well, the key relative high is at 164.9. We closed out Friday at 164.56. So as of right now, we have not passed. Equal weight S&P 500 is not actually in blue sky territory if we're below this area. I need to see this chart higher next week, notably because we have all these really big catalysts. Next one up here is XLF. If we look here, we're also really close, within a couple of cents or under 1%, but currently not over that 41.7 previous all-time high. Let's look at CAF now. Why? Well, very similar charts. It still looks like it was a double top, but it actually lagged lower. Why? Because we got a repricing in interest rates, and that means that the Russell went lower. These are the best stocks in the Russell, not the only ones. The Russell 2000, yep, it's down by about 2.2% on the week. And utilities also took a pretty big hit, falling back below the previous all-time high. So what does all this mean? Well, it really means that the bulls are likely going to face another really big test this week, notably our final boss in Jerome Powell, when we hear about the update to the SCP, when last time they told us that we would have 3 cuts. Now, is it going to be 1 or is it going to be 2? Thank you very much for tuning in. Maybe you want to click on the left to subscribe to the channel or come hang out with me at 9:15 on Monday. Thanks so much for tuning in.